Hello, I'm Brian Resnick. I'm a senior investment strategist with AllianceBernstein, and welcome to Uncommon Capital, a podcast where we explore the far corners of the private markets and learn important lessons from professional investors. Today, I'm sitting down with Emily Wilson, who is a managing director at AB CarVal, focused on aviation investing. She has been in the investment management industry since 2005 and has spent much of that time focused on aviation. She has a bachelor's degree in mechanical engineering from Harvard University and is a CFA charter holder. Emily, thanks for coming and being part of the podcast today.
Thank you for having me. I'm excited for this.
Great. So, I want to start with your background a little bit and talk about how you ended up in your current position. You started out as a teaching assistant right out of undergrad. Did you consider teaching as a career?
So I was actually a teaching assistant while I was in school. That was how I funded things like pizza and beverages of various sorts during college. So I think I realized relatively early on that I was a reasonable communicator. And so that made things like teaching calculus and intro engineering a fun prospect versus the other kinds of jobs that are available to people with no degrees.
As a quant, I also actually find calculus to be rather fun, but I think we might be unique in that particular space. But it's interesting because you studied mechanical engineering and then you came over to Wall Street originally to work in the fixed income trading desk, and which is a rather quant or more quantitative end of the business. Did you know you wanted to come into this business? How did you end up, working in Wall Street? What was that transition like?
I went to college intending to design and build roller coasters for a career.
Wow.
So I figured I needed a degree in mechanical engineering for that.
Wait,
so
I have to just double click on that for a minute. Why roller coasters? Are you a roller coaster enthusiast?
I am not anymore. I guess I must have been at the time. It seemed like I always liked to build things. I was really I was a big nerd growing up. So math and physics were sort of the places where I found the most natural interest, at least school-wise. So at the time, for a 18-year-old, seemed like a fun use of that kind of skill set, I guess.
So when did that change from roller coasters to Morgan Stanley?
So first it changed from roller coasters to maybe just engineering, because as it turns out, there aren't that many roller coasters getting built, and I hadn't, learned about supply and demand yet at that age. So, I sort of let go of that particular interest reasonably early, but I still thought I wanted to be an engineer up until, I would say, the summer before my senior year in college. I had an internship, and I spent most of a summer in a room with a computer by myself doing work I was really interested in, but I realized that studying engineering and the actual job of being an engineer were not necessarily the same thing. And it felt unappealing to take a job where I felt like I would be mostly sitting by myself and working on stuff where people talk to each other all the time.
I can really relate to that. I think it was a smart decision. I think a lot of times when you're studying, because I also loved physics and math, and when you're studying these things, what turns you on academically is very different than what you're going to be doing in the real world. And if you like, working with other people and being interpersonal, you're right. A lot of those engineering type jobs tend to be somewhat isolating. I imagine that your mechanical engineering background must have helped. Is that a coincidence? Do you really find that you've been able to utilize some of those skills in order to help you navigate the aviation business?
What I have used that has been helpful is a general problem-solving approach to most ideas. So I think engineering differs a little bit from other kind of hard science fields in that most of the time you're trying to find an answer for a problem which has no specific answer that is correct. In engineering, you're trying to find a solution that works well. You often are not finding the absolute most efficient solution. I think I sort of learned early on that what you're seeking is a kind of balance between the amount of work you're willing to put into finding a solution. I think there have been maybe a surprising number of aspects of business where that has really been a helpful perspective to come at a problem with.
Right, because it's sometimes if you take too long to solve a problem, time is money, as they say, you're saying that one of the benefits of thinking like an engineer for an investor is coming up with a solution that works and may not be optimal, but works and works right now.
Right. Exactly. You may be it might be appealing to get the last basis point, but it might not, you might end up spending more on legal than that basis point is getting you if you're not balancing all of the different kind of inputs into your investing equation.
I want to talk a little bit about aviation investing because you've been involved on the sell side, now on the buy side for quite a while. And I think when most investors think about aviation or investing in aviation, they think about perhaps investing in the manufacturing of airplanes or investing in the carriers. But you've really spent your time investing in the airplanes, the hard assets themselves. So tell us a little bit about that.
So we toss around the term aircraft lease equity fairly often in the space, which maybe sounds a little intimidating, maybe isn't totally obvious what that means. All it really means is owning aircraft that are on lease. The general idea is we buy an asset, we have it on lease to somebody who's going to pay us money for it. At some point we sell it, and that's your set of cash flows. You have rent, and then you have the residual, so whatever the actual asset is worth at the point when you sell it, whether that's at the end of its life and you're selling it for parts or whether you're selling it to another financial owner while it's still on lease. In terms of what goes into making sure you are doing a good job choosing assets and pricing them correctly and managing those cash flows appropriately, that part you need a lot of expertise, and you need people who really know what they're doing on the technical side to make sure that you are actually able to predict what those cash flows might be with enough accuracy to buy planes. But when it comes down to it, that is, the main idea of our business is just we own a hard asset, somebody pays us to use it, and then at some point we sell it.
So, if I think about that, so at the surface level, simple to explain, but as you said, incredibly complex as you look under the hood. I imagine throughout your career, you must have had some great lessons early on. I know you're involved on the public side as opposed to the private side, so maybe we can talk a little bit about some of those early lessons.
So when I first moved into the aviation space, I was working at Morgan Stanley at the time. I was trading bonds where you have collateral, and the collateral is mortgages essentially on planes. So there is a credit aspect because there's an airline that needs to pay, but you've grouped together, say, 15 or 30 aircraft and created one piece of debt. At the time, there was a pretty robust trading market for this product, so my job was both to take positions that might make us money and also make markets. But so I had been asked to make a market in it, and I didn't own any. So I borrowed them and I sold bonds I did not have. So I took a short position. And I felt fine about it for a while because when I looked at my giant spreadsheet I had, put together of all the different bonds and all these different aspects, it was overpriced. On a relative value basis, it was overpriced versus the other similar securities that were trading at the time. I still believe that to be true. However, the thing I hadn't taken into account is if you take a short position in a bond, you need to be able to buy it back at some point. If you take a short position in anything, you need to be able to buy it back at some point. What I hadn't factored in is that there is a difference between the fundamentals of an investment and the technicals of a market. But I learned eventually, it wasn't immediate because it took me a while to realize that I could not buy these bonds. Nobody wanted to sell them to me. And so I ended up covering the position. It wasn't an enormous loss. It wasn't a huge position, but maybe 5-10 points the wrong direction. And it really sort of drove home for me that when you're making an investment, you need to know when you go in, what needs to happen for you to get out of it. And so I think having that experience at the stage I did in my career was really helpful, both in understanding, the importance of thinking through your exit, which still applies to everything that we invest in today. How do you get your principal back, let alone your return. How are you going to get out of this? And it also taught me that there are a lot of different types of investors out there, and they don't all have the same motivations.
So how do you apply that now that you're working on the private side of the business? That's the public side. On the private side of the business, where maybe the technicals, so to speak, aren't quite the same, how does that lesson translate over for you today?
When we look at an aircraft position, there are a number of different kinds of planes that we are willing to invest in. There are lots of different types of planes that fly. So one thing that we really make sure we understand before we invest in something is, what is the market for that actual aircraft with that specific variant? And so you may have an idea of what an aircraft is worth today, but if the timeline of your investment, say, is holding it for 3 or 4 years, and then you want to sell it to another financial buyer, you need to have an understanding of what kind of buyer is going to be interested in this asset at that time. The work we do when we underwrite that plane, whether we're going to buy it or not to begin with, includes looking at the number of operators that fly that type of asset, the number of planes in that asset class that exist. So while we are willing to invest in kind of a broad array of different types of planes, what we do most often is invest in midlife narrow bodies. So that's A320s, that's 737-800s, the kind of plane that you get on and there's 3 seats on each side and one aisle down the middle.
If you're flying from New York to Chicago, You're probably sitting on one of these.
Exactly. And the reason that we gravitate towards that part of the market is that those types are extremely ubiquitous. There are lots of them flying, but there are so many operators, hundreds of operators, which is in contrast to, say, if you look at wide body asset types to begin with have a smaller operator base, because generally you're only seeing them fly very long distances, often overseas. So you're looking at operators that have real international businesses generally. So that already cuts down your operator base pretty significantly. And then within that, there are a number of types, both wide bodies and narrow bodies, that are only operated in a significant way by a few carriers. We try to maintain as much optionality as we can when we buy aircraft.
We talked about the technicals. I'd love to talk a little bit about the fundamentals of aviation leasing, because I don't think people really understand what the market dynamics. I mean, you're buying airplanes and leasing them out to carriers really around the world. So help me understand a little bit about the fundamentals or the macro that's driving this opportunity.
The demand for air travel has been growing at 1.7 times GDP for about 50 years. And I think there are a number of reasons for it, but one that I think really illustrates it well is the growth of the global middle class. So if we think about how much flying, your typical American does, your average American takes just over 2 flights a year. Similar in Europe, similar in a number of developed countries. We travel a little bit more than most others. But in developed countries, let's say you're in the high 1s to low 2s trips per year for your average person. If you look at some of the developing world, places like India and China, the trips flown per year per capita in those places are less than half. So even if all we're looking at is the gap between how much people fly in more developed parts of the world versus how much people fly in places where there's more economic development to get to a stage of having a significant middle class, that gap is huge. And when we're talking about the demand for airplanes, because we have a movable asset here, even if you might not be, say, directly investing in an aircraft in China, an increase in demand for flying, just for people to be flown in anywhere in the world, is going to raise the overall demand for seats that can be flown. And so when we think about the aircraft market, a small change in the appetite for passenger flight in some of those big markets will have a really large impact on the amount of flying that needs to be done. And that's what drives the demand for aircraft.
The emerging middle class, it sounds like, is really continuing this demand growth. What about the supply side? I mean, tell me a little bit about the supply side as it relates to airplanes.
The supply for aircraft is predictable, and it is constrained by right now only having two manufacturers that really compete in the larger passenger aircraft space. And the lead times for any change in that industry, whether it's, Boeing or Airbus coming out with a new type, it's years and years, decades. So we have predictable supply from Airbus and Boeing that is constrained, and there is not another competitor that we expect to come into that market in the foreseeable future.
Would you say there is a supply gap right now, or how does that supply look relative to the demand, in your opinion?
With the supply-demand dynamic right now, we are extremely undersupplied for aircraft. We've had a number of issues with the manufacturers, safety issues that have caused things to slow down.
How much of a factor was COVID in all of this? Was that a big factor in terms of supply coming up?
Yep, absolutely. If I were to say there are three big aspects that have affected supply in the past few years, the manufacturing issues is one. COVID caused quite a few carriers to take aircraft offline. In the early stages of COVID, we had the opposite dynamic. We had no demand for flying, and we had lots of supply because nobody was flying the planes that we had. But what ended up happening as we came out of COVID is that a lot of aircraft that were taken out of service were hard to get back into service when we needed them. So maintenance is a huge factor in every part of investing in aviation. But because of the supply shortages for parts and supply chain disruptions that we saw during COVID, the times it took for aircraft owners and operators to get planes back in the sky after COVID ended up being much longer than expected. So there has been a maintenance backup that is still ongoing, where if you have an aircraft that is due for maintenance, there are a number of points in an aircraft's life cycle where it needs to be maintained before it can fly again. Predictable ones, not things that have gone wrong. And so it has gotten very difficult to secure spots to have maintenance done. So planes now are on the ground longer than they typically would be because we are still getting through supply chain issues. 5 years into COVID, there are still issues getting worked out that have caused this maintenance backup. So we have less planes coming in from the manufacturers. We have maintenance backups, and we've also seen a few consistent issues that have caused grounding of aircraft that were otherwise not expected.
We've talked about the fact that there's clearly an undersupply of airplanes. You have this massive growing demand for air travel that continues to outpace supply. My question to you is, where is the opportunity from a business perspective or an investor perspective to be a lessor?
Okay, so what we have seen over the past 15, 20 years in the aviation space is a higher and higher percentage of the aircraft that are out there being flown owned by a lessor and leased to the airline. It used to be, if you look back 30, 40 years, airlines were owning many more of the planes they were flying. Now we see a lot more aircraft on operating leases where the financial owner of the aircraft is not the airline.
So why has that shift happened, in your opinion? What do you think has caused that?
It is a tough business to run an airline. The kind of growth of the lessor market has made it a little bit easier for airlines to manage their fleets. So in addition to being able to, say, go put in an order with one of the manufacturers or buy an asset from somebody else, now you can also, as an airline, say, okay, we need a couple more aircraft for this market. Let's just try to rent them from somebody that owns them.
And then it
So
becomes,
it's
they don't have to borrow in order to do that. It becomes less of a capital burden, I imagine.
much less of a capital burden. So it has increased the flexibility for airlines to be able to manage their fleets. And it has also lowered the barrier to entry for some younger airlines as well.
And how many airplanes would you say these days are leased versus owned? Is it a large portion of the global fleet? Is it a small portion? What does that look like today?
It's a little bit over half now.
Wow,
and
so
we
over
expect it
half
to
the
keep
airplanes that are flying are leased. So this capital solution has become obviously a big part of that industry then.
huge part of the industry. Yes.
And so you talk a little bit about investors wanting to get access to this. What makes this appealing for investors?
Yeah. So I think aircraft leasing allows for very predictable, solid returns. If we think about the historical returns from aircraft, not from airlines, but from aircraft, from actually leasing aircraft, we actually see much less correlation to related classes as you would think. So from a perspective of an investor who's managing assets across a number of different asset classes, having something that is being able to own aircraft which are uncorrelated to many of the other assets that they might own, that in itself I think is appealing.
So this is a great diversifier.
Very, very good diversifier.
Does this act more like fixed income or more like equities for someone who's approaching private markets, perhaps for the first time? Yeah, how do you think about the behavior of this asset class?
So we have a rough idea of what the life of the aircraft is. We have an idea of what the components of the aircraft will be worth at various points along that life cycle. And that allows us to fairly predictably price what that asset should be worth at any point in its life cycle. And I think, in terms of is this equity or is this fixed income, one thing that is I think super appealing about aircraft lease equity is your downside protection. So, we at AB CarVal generally tend to really focus on, okay, how are we getting our principal back before we're worried about return? And I think in aircraft lease equity, because your asset is movable, if you are investing responsibly in terms of jurisdiction, you're making sure you're investing in places where you can go get that aircraft if there is a problem.
What advice would you give to somebody who is, coming into this business or looking to invest in aviation or in airlines?
I think the one important thing I would add is pick the right partner. At AB CarVal, we own the assets. We also own Ergo. Ergo Capital is an aircraft servicer, an aircraft lessor, Dublin-based, with about 80 people working there. If you're an investor looking to own aircraft, you need to know that the people managing the maintenance cycle of that aircraft, the people helping you value the parts, either at underwriting when you're projecting out, or when you actually go to sell the aircraft or to sell it in pieces. You need to know that the partner you have chosen to work with on the asset servicing side really is an expert. You need people that have relationships with airlines and other asset owners in order to be able to manage the aircraft through its leasing life as well as its maintenance cycle.
Emily, I want to thank you for coming in today. This has been a fabulous conversation. I really enjoyed it, and I hope you did as well.
Oh, thank you so much. I'm so happy to have done it.
Thank you for listening to today's episode. Please rate, review, and subscribe on your favorite podcast platform. I'm Brian Resnick, and you've been listening to Uncommon Capital.